Okay, so for the last part, we'll have what's this? Saving costs. So for example, you're employing a new system that's going to help you save costs. Basically, let's say you have like you're running a dialysis center, but then you want to automate everything so it becomes makes things like easier to do and faster to do. So that's what we're going to project. So since it's saving costs, we have to know our initial costs. Okay, so we assume that our initial costs are like other expenses over here. Okay, so we're going to copy other expenses. There we go. There. Okay, so these are expenses for our projected expenses for year 2018 to 2020 over here. Okay, and what we're gonna do is so sorry about that. What we're gonna do is we're gonna employ a cost saving strategy by by having a electronic system, which is gonna save us maybe, let's say, 10 to 20% of our costs. All right, so we're gonna have percent saved, or whatever you want to call it. Okay, so it's going to be equal to this times 0.1, right? And then every year, maybe we can make this increase. So this times 0.12, this times 0.14, plus this times 0.16, and then equals to this times 0.20, 0.18. The reason why it's slowly increasing is because when you employ a new system, you're not immediately fully efficient using it. So every year you increase it in efficiency. You can actually make this like 0.14 already if you want. You can make this 0.20 at the end. All right. And then so anyway, that's how your savings will look like. Okay. And then you also have to consider maybe like with this new system, I also have to hire more people. So like I have to get trained employees. And these trained employees are gonna cost me like, let's see, they're gonna cost you like 30,000 a month times 12 months. 30,000. Sorry, there's a comma there. Okay. So, and then you make it grow by 1.05%. Okay. So now you've taken into account that with your strategy, you're gonna be able to you're gonna increase your savings by this much, but it's gonna cost you this much to operate. So your net savings will be equal to your savings less how much it costs to run it, your employees. Okay? And then before we move on to the income statement, we'll do net present value as well. So you have your initial investment, and then you have your NPV. So let's say our initial investment was like, I don't know, 8 million for a fully automated system, right? Then your net present value is net present value. It's going to be, once again, we're going to use 0.5%. We're going to use 5% cash flows. Then we'll just less the 8 million investment. So ultimately our net present value is at 4 million, almost 5 million. So that means it's a positive project over the next 5 years. If you want, you can also do it over the next 3 years. You have to decrease this, but if you do it over 3 years, you find out it's negative. So you can say that there, if you're going to employ the project for the next 3 years, it's not a good plan. So we're going to do it for 5 years, and we see that over 5 years, it pays off. Alright? And then for adjusting our income statement, we'll do the same thing as we did. We'll do something similar as we did a while ago. Okay. So our revenues don't change, right? Because we're not touching revenues, we're just touching expenses. Our cost of sales will be the same, fraction of revenue. Gross profit will be the same. What's going to change now is our number of employees. So you have number of employees, our employee cost will be added by this much. Okay, so there. And then our other expenses will decrease. Actually, we can just use other expenses less percent saved. Right? So now, instead of spending the 18 million here, we're only spending 16 million. Okay, then you notice it doesn't increase too fast because we're still improving efficiency here, right? Like it was 1% here, 14% here, then 20%. Right? Then so now our total expenses is going to be equal to our employees plus our other expenses. Our earnings before tax, this is going to be equal to our gross profit less our total expenses over here. Gross profit less total expenses. Tax rate 30%. And then net income, and we can see here that it grows to about 9 million. Okay, so those are the two strategies if you're trying to earn money, if you're trying to sell more revenue or save on costs. Okay, so I hope this helps you guys in any way. All right, thanks guys.